Hey, all right, guys. We're going to get started here in about a minute. Just want to make sure that you guys can hear me okay. Let me see if I have that chat session. Yeah, if you can just let me know that you can hear me, that would be great. Anyone out there? Perfect. Thanks. All right. So before we get started here, got a few people. All right. Where are you guys from? Anywhere from US? New Jersey. All right. Anywhere else? I've lived in California, Texas, Michigan. Hey, all right. Texas, Wisconsin, Florida, Texas, North Carolina. Cool. Northern California. Beautiful up there. I lived up there 1 year. Beautiful. All right. Great. Connecticut. Awesome. Yeah, I hear a lot about New Jersey as well. A couple cousins out there. And yeah, they like it. They like it a lot. Okay. All right, guys. So this is a webinar about how to trade options on futures. And the reason that I do that is, well, I'm going to tell you, right, during the webinar here why I do that. But it's a great way to avert the possibility of being flagged for PDT, and it's just a great tool for like an overnight trade, and we'll get a lot more into that specifics when we start here. Okay. All right. So let's get started. All right. So I am going to, or actually what you can expect. I'm going to show you how you can make consistent returns monthly based on margin capital at risk using high probability trades without taking large losses and making those returns over month over month. Okay. And that's really the goal for most traders. I hope so. Okay. So what we're going to learn today is, one, understanding the difference between SPX option trades and options on futures trades. How to identify the strike prices, and strike spread width on ES futures, and the option trades to increase your chances of profitability, and how to identify the intraday trade setups that yield quick directional trades in a trending market, and the best time to trade. I like, overnight, and how best to mitigate 0 or 1 DTE options on futures trades that are threatened. Okay. All right. So stay with me till the end. I have a special bonus for you, and and I hope that that you'll like it. I think you will. And before we get really started in here, let's talk about the reason you're here. Okay. And I'm gonna ask you 3 reasons, right? One, you're interested in learning new strategies that will take your trading performance to the next level, so that you can finally leave that 9-to-5 career aside. Number 2, you've seen, heard about, read about, and others making money trading, and you know that you can do it too, but you're just not seeing your account grow fast enough based on your goals. And number 3, you've tried different trading strategies that you thought, okay, this is it, only to discover that it's just not getting you to the place of consistent trading results. All right. So so let me know here where you fit in. 1, interested in learning new strategies. 2, to see your account grow month after month. And 3, find the right strategy that provides consistent trading results. All right. Great. 1, 2, 3, 1, 2, 3, 1, 1, and 2. Awesome. Camel, Cap. All right. Cool. James, 1. Option lover, 3. 3, 1, 2, 3. Awesome. Okay, cool. Okay, I guess we're in the right place. Awesome. All right, and you guys are way up there in in sitting in here with this process. All right, so here we go. So I am a regular guy. It's my family on the left-hand side and my parents on the right. It was an MBA program a long, long time ago, and I just love trading. I was in the tech world for a long time, and then kind of semi-retired, and then and started a new place where I love to trade in options. All right, so that's that. All right, so let's talk about the specific trade that we're going to be doing here, and this is the ES option. So ES is a derivative of SPX, and those are futures trades, but we're trading. Actually, we're not trading the actual positions, but we're trading options on those. Okay. All right. So basically, it is a credit spread, and it has a combination of two puts or two calls, where the put and call that is sold is more expensive than the put and call that is bought. Okay, it's very similar to SPX. Okay, so here's the way that the position goes in to the to the market, and we'll talk a lot. We'll go through each of these things here and what they do. All right, and here in this case here, we're selling at 37.15 put and buying a 3700 put, and you can see here that normally I do a 10 wide on SPX, but with options on futures, I use 15 wide. Okay, and we'll talk more about that in a minute here. Okay, the trade is considered to be a high probability trade. Right. So let's imagine here that you would be feeling like if most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow at the same time. Now, state of mind as a trader is really, really important. Okay, discipline, wanting to make a difference, wanting to make money, obviously all those things, right? So becoming the trader that no longer takes large losses, but consistently trades according to a proven trade plan that is profitable over time, allowing you to grow your account month after month. Okay, so that's basically what all traders want to do. Be consistent, make money, and have a great life. Okay. All right. So let's just dissect this thing here. Okay. So first of all, these are the contracts traded, and in this case we have one, right? And it's a vertical, just like SPX. And then this is the futures contract. Okay. That we look at, and then the multiplier. So the multiplier typically in stocks and options are 100. Okay, so it's the position is times 100 when you make a trade. So in this case here, it's actually in half. It's cut in half. So the multiplier is actually 50 instead of 100. And we'll talk more about that again. Okay. The expiration is Monday, and the week, within the week. Okay. And that's the nomenclature of how they put these. This is the futures contract extension. And then the short strike is 37.15, and the long strike is 3700. Now, this is a put, okay, and you can do these with puts and calls, right? And here, that's the option type, and here is the premium that you get. Now, remember, you're got to cut that in half, right? So you're not going to get 125 for that. When you sell that option, you're going to get half of that, all right? And that's how it works. All right, credit spread risk reward, it's just as bad as SPX, okay? These are credit spreads, and you got to be very careful with credit spreads. And as long as you're within a range in trading, you're fine. You're always going to be fine, right? But once you get threatened, basically, you can lose a lot of money. Okay, and I'm not going to sugarcoat it. That's what happens, right? So the risk reward in this case here is 62.50, right? You cut that in half, and that's your that's your max gain that you can get, okay, in this trade. Max loss is 437.50 minus the minus the 62.50, and that's what that's the max loss that you can get in this trade as well. Okay, all right. So let's talk about SPX options decay. Okay, it's and these are futures decays as well. All right, so basically it's typically the same thing. From 68 days to 33 days, the rate of decay is 34%. From 33 days to 5 days, the rate of decay is 57%. And from 5 days to expiration, the rate of decay is 100%. So it's always helping you when you're selling options, okay? And that happens all the way around. Okay, so let's talk about the profitability factors. Number one is implied volatility. So the ideal setup is when you're entering a trade, you want the volatility to be higher than when you exit a trade, okay? Because that's helping, volatility is helping you to close in those trades, right? If it goes the other way, typically it's tougher, okay? All right, profitability number two is theta, which is one of the Greeks that measures the rate of decline in the value of the option due to the passage of time. Okay, so that's based on volatility, and we just talked about that. All right, and the profitability number three is market direction. Okay, so if you're trading these credit spreads and the market is, let's say it's a bull spread, you want the bull spread, basically you want the market to move higher. And in the other case, if it's a call spread, basically you want the position to go lower, okay? And again within those ranges, okay. And by the way, this is recorded, okay? So you'll be able to listen to it. And at the end, basically, I will answer all the questions that you guys have as well. Okay. All right, great. All right, so let's talk about risk management guidelines, and this is something that I use all the time. Okay. So number one is always trade with a plan. Right. Write it out. Understand it. Know the mechanics of it, and allow yourself to become an expert at it, okay? And that's really what you want to do, okay? Determine the max loss and risk reward before entering the trade. Number three, use no more than 20% credit margin at your trading capital. So basically, if you have a $10,000 account, you don't want to you don't want to go above $2,000, okay? Don't allow more than 2% loss in a trade. A lot of traders use 1%. I use 2%, and it works out fine. But that's what you want to do. For highly trending markets, position the trades to follow the trend, right? As we talked about, calls and puts, etc. Size your trades to ensure emotions do not be part of the decision-making process. And I've always say trade small, trade often, especially if you are new to any strategy that you're using. And so trading small allows you to not have the emotions be part of the decision-making process, and trading often is where you get the expertise, right? So a combination of that allows you over time to become very, very proficient in your trading. Okay. All right. So I look over the pre-market routine. Obviously, I know because I'm trading every single day. I know where the support and resistance is, what the U.S. dollar does. And typically when the U.S. dollar goes higher, it puts pressure on SPX, and then if you're going the other way, it's easier. Okay. 10-year treasuries, excuse me, 10-year treasuries, when you trade those, the treasuries again put pressure on rates, and that is counter to where the market is going. Okay. And then review ES futures trading. I like to do that because if you're trading SPX, the market opens at 9:30 and it closes at 4, and then after that, ES takes over. Within a half, after an hour, and it trades all night. And that's one of the benefits of trading ES futures as well. Okay. Because you're not stuck with a position at 4 o'clock, and then the market moves, and you don't have any way to manage it, but you can with ES. I review the the VIX, which is the VIX is where you get the volatility. Okay. And so typically, as a trader, you're mostly in this range of probably 11, 12 to 20, which is pretty high, and sometimes it goes real high, a lot higher, and then but that's that range. Okay. And so if you're looking at trading, and you're putting on a position, and the market has been moving up or moving down, right? Typically the VIX goes higher, and it allows you to leverage additional range in the market. Okay. And that's why I like to put on trades when the market is typically higher or lower, and that has higher volatility, and that's really, it really works if you do it well. Excuse me. Determine if credit spread positions are saved, and when you're getting ready to trade, you want to be ready, right, to put on that trade and know where that position is going to be. Okay, here we go. So post-market routine: determine if rules were broken and why. Determine if the risk was within acceptable levels, especially if you're winning. Okay. And I say that because if you're winning, you typically want to put on more trades, and that's really it's really the opposite of what you should be doing. Okay. So you want to really want to manage that, and a trade plan really works for that. Okay. Determine if losses were within acceptable ranges. Determine if tweaks or adjustments are needed to trade in that plan, and update the trade journal with your findings. Okay. So that's really the best way to be a disciplined trader. All right, let's talk a little bit about pattern day trade trader. Now with the market moving up and down, etc., you don't want to be in a position to trade with SPX below 25,000. Okay, you can do that, but it can be you can get restricted because of that. Okay, so what it can happen basically, if your account goes below 25,000, your account can be restricted basically for 90 days, and it's gotten tighter on that over time. So how to avoid the flag, to get flagged? How to avoid that? Basically, limit trades to one trade 3 times a week. So basically, you can trade with SPX. And these are things that are important to understand. So you can trade um, within a 5-day period, or 5-day period. You can trade 3 positions in and out. Okay. So basically, once you go past that third threshold, you can be restricted if your account is under 25,000. Okay. With trading options on futures, basically wipes that out. There's no PDT restrictions on that. You can trade basically the same way that you can trade with SPX. And I know that a lot of traders do that, that don't have the 25,000, and they trade options on futures because you can trade all day long, make many positions, create many positions, and you won't get flagged on that. Okay. So that's really one of the great benefits of trading options on futures. Right, so let's talk about options on futures trades, okay? All right, so what's the difference here? One, SPX has overnight risk, no overnight risk on ES, okay? Multiplier is 100 for SPX, multiplier is 50 on ES. Greater margin requirement for SPX, less margin requirement for ES contracts. Okay. Now the contract is actually, the commissions on that contract is actually higher. All right. But when we look at it, in a few minutes here, you'll see that it really is a better way to trade. Other than better way to trade than SPX. Okay, commissions are less expensive on SPX and more expensive on ES overall, but we're going to talk about this now. Okay, all right. So I'm going to give you a scenario here between SPX and ES, and how that works and relates to what your trading is. Okay, right. So we got this position here. Okay, so this is a 10 wide position, 38.40, 38.30. The max profit here is it's one contract, and so it's $80 in this case. Your max loss is $920. And the credit on that is $80 because you're putting on a IC. No, actually it's a you're putting on a vertical here. Okay, and the credit that you receive is $77.84. All right. Okay, so now with a vertical for ES, right? You can trade this with 38.60, 38.50. That's a 10 wide. Right now, you're getting $1.10 on this. However, you got to cut that in half, right? So your max profit on this is 55 cents because of the multiplier. So also, your max gain here, your max loss is $445, which with having that multiplier, you can actually lower your amount, the amount that you trade, because with in this case here, it's a 10 wide, right? And you're using a 10 wide here, but you can actually go lower than that when you're trading 5 wides. Okay, so so that's one of the other benefits that you have. Okay, all right. So now let's see here. Okay, so you can see here the credit that you received was $77.84 and $51.36, which is less, right? But remember, you're trading a smaller amount in this. Okay, so let's look at it a different way. So So here you have 52% additional premium with SPX, and you have 82 additional buying power required. And that allows you to trade smaller. Okay. Now let's do a different way and making it an additional width on the position. Okay. So same thing for the for XPX, but now we're going to widen this position, right? So it's 15 wide instead of 10 wide. Okay. And here you get 80 cents credit, so that's what you get. And here you get 160, but you multiply it, right? You divide it by half, and you get 80 cents. So now what you have is you have the same exact thing now. Okay. So this is like apples to apples, right? So we have $80 profit, max profit, using $920, and here you have 80 credit, right? But now you have your max loss is 670. So you see the comparison. Yes, you have more commissions, right? But the comparison between the two, you're actually getting a better bang for the buck with ES futures, right? Because the amount that you have to lay out is much less, right? So you can trade more, you can trade bigger. Okay. And that's really one of the benefits for trading ES as well. All right. So let's look at it real quick. Here, basically the same credit for each, right? 2% additional premium. And here you get 21% additional buying power for options on futures. All right. So that's, again, it's just a comparison, and it's a much better deal for trading these. All right. Okay. All right. Somebody said that I am not sharing the screen. You might want to close and then open up the webinar. Okay. All right. Hopefully you can get in, and again, we're going to have this. Okay, great, awesome. So you're able to get in and get the replay, just in case you don't. And most of the guys, most of you guys, I'm sure you go back and listen to this thing over again. All right, so here we go. So let's talk about a threatened trade. Enter spreads. Okay. I'm sorry, this is entry, exit, and threaten. All right, so all of that. So let's talk about moving in here. So you're moving in with a 15 wide spread position, okay? And then the deltas basically are the same. 6 to 8 is what I use, and in this case here, it's 15 wide, and you cut that in half, right? And that's what your that's what your max gain is, right, for the position. Take profit, I like to use 10 cents or expiration. And if a trade is threatened, you want to use 3x short strike stop loss. All right. So basically, if you put on a position, let's say it's $1, right? If the position goes above the position goes above $3, right? You want to close that and use a stop loss on that. One thing with options on futures is that you cannot roll, right? You can only roll within the same expiration period, but you cannot roll outside of it unless you do it mechanically. If you do it, you just can't roll these positions. But you can close a position and put it back on, but you can't roll them. Okay. All right. So so rolling a trade using with a condor within 20 points of a breach is increases that width. All right. Okay. So you want to close that threatened trade and open a new one, and with a net credit. However, when I trade, I basically, if I get up to that 3x, I'll just close the trade and move on, for the next day. All right, so let's talk about the different ways that you can trade here. Okay, and these are trades that I put on a while back, and they're basically the same thing in a market, and this is how they work. Okay. All right. So these are actual trades that I did, and I'm going to show you the good, the bad, and the ugly here. Okay, of how this works, just so you have a real understanding of how these positions work. Okay, so in this case here, we put on a 15 wide, 2 contracts, and collected $60. Okay, for the call, and here we put on the put for $70. Now you can see here that we're going to be underwater because you put on the call first, and the market's going up, which is what you don't want it to do, and then I put on the put, and the market started going down, but it went up again. Okay, so what happened? So now the position here went from 70. Well, let me see here. The call went from 60 to 95, right? As it was going up here. And then the put actually went lower, right? And it came out to $3, right? Which is extreme. Now you're in a threatened trade here, right? So that put position basically went from 70 to $3, right? As the market went down. So now in this case here, you had a total fees and commissions. So you lost $265, okay, in this 2 contract trade, right? All right, now we're going to go and put on a put spread. Get that out of there. Okay. 15 wide, and this put spread was $1.30. And what do you get for $1.30? It's around 60, basically half of that. Okay. So the market went up, right? And we closed that position at 10 cents. So that's a good thing. Then after that, I put on a put position again as the market went up. It did go up, and then it went back down, and the market went back down, and then towards the end of the day, basically we closed that position for 5 cents. And then we put on another position here, a put spread, right? And this is really close to the market, the end of the market here. And the market went up, and you collected another 60 cents, on this position. In this case here, we made $285 on these positions. Now remember, if you're trading SPX, and and you're under 25,000, you're not going to be able to do this, right? But with ES, you're able to do it. Okay. Now here's the market here moving, well, way down here. Okay. So now we put on, and obviously I didn't know that was going to happen. Okay, so we put on this position and put on a put spread for $1.30. and we put on a call spread for $1.05. Okay, was working really well during that period. Then the market went down for the call side, and we were able to close that position at 10 cents. And then we put on another call spread here, since the market was still moving down, right? And we closed that position for 10 cents. And then this part here, basically what happened was we had an assignment, okay? So now let me talk a little bit about assignments, okay? So with ES positions, you're able to, you're able to close those positions for a loss, and a gain, right? But when when that position goes in the money, right? So within the range of, let's say, 3760, which was 3760 and 38. Let me see which one it was. No, this was the put. So the put went from 130, right? And it went down to basically 3750, around that area, 3760. So within that range here, right? You can see it was 3760, 3745. That allowed basically the market to assign you a futures contract. Okay. So if you're in with that range, if you're in that range in the money, all right, what'll happen is it's not like SPX. You'll get assigned a futures contract, okay, for that position. So you got to keep that in mind when you're trading, right? So that's one of the things that is it could be good, it could be bad, right? But in this case, this is what happens with options on futures, right? If you're in that middle part of that position. If you're out, you'll get a max loss. But if you're, and if the market goes the other way, you'll get a max gain, right? But in this case, we had an assignment, and I was actually early on, figuring out how this works, right? And yes, I was assigned, but then I managed the position with futures contract, not with a futures contract, and I was able to get out, not so bad, on this. But you got to keep that in mind, okay? Because this could happen. All right. So this was the assignment, and that's what it looks like here. Okay. That's what I got. And here, in this case here, even with the assignment, I still eked out $35 on the position. All right. So let's go through another trade here. Right. So let's see. Okay. So we sold a put for 130 and a call for 125. Okay. So basically, I waited for the put to move and put on the call later on. Okay. So the call went from 125 here down to 110, and I think we closed that position. Okay. And then here, basically, we put on a put, and the market went up and went down, and I think we closed that position as well after that. Yeah. Okay. So there we eked out $25 here on this position. Okay. All right. Another trade. I think this is the last one. Okay. Let's see here. All right. Put on a put spread, $1.20, and then we closed that position. The market went up. Closed that position for 10 cents, and then put on another put. Market went down, and then it went up again, and we got out at 45 cents. and that was a nice trade. That was a pretty nice, easy trade, and it was, it was basically a market condition that was moving higher. All right, so now we have 38.85, 38.70 is a 130 position here. So we put on a call and a put on here. And then the market went down, favorable for the call position. And then the market went up and we got out at 10 cents. So that was perfect, right? So now we put on a put side again, 85 cents. Market went up and we got out of that trade and expired, basically. So that's pretty much a perfect trade. And these were with 1 contracts. Okay. All right. So that's really the the crux of this position of this trading. But I wanted to share with you basically what you would like if you would like to follow our trades. And I have a trade alert service, all right, that we do, SPX, options on futures, futures. We do all kinds of trading. And if you want to learn about our short-term strategies and how you can be a consistently profitable trader, this is a great place to get in and really understand how to trade these. Okay, so would you like to do this? Of course, right? Anyone. So basically, we take a a learn while you earn strategy, and it really works out really well, guys. Okay. So remember when I said if you're interested in learning new strategies, you want to desire to see your account grow and see that finally that you can provide that consistent results, this is it. Okay. So if you want to break those barriers, right? And in this case here, what are you going to do? Are you going to keep doing what you're doing and hope that it sticks, or are you going to finally take the steps that finally make it, that allows you to allow yourself to make those trades work? Okay. And yes, it's a great place to start, but it takes work. Okay. It takes work with anything good. Okay. So you want to have a no quit attitude, a commitment, discipline, and having an edge, right? And the edge really is allowing yourself to build that expertise with people around you that really can help you. Okay. So these are trade alerts, and they are we have a lot of them that are automated. So they come out from my account into the Tasty Trade, and then basically there's no ambiguity about these signals. Okay, they work really well. Okay, so you get that trade alert within 60 seconds, and typically it's around 30 seconds, pretty much. So we have live chat, okay, and subscriber chat. And these are chats going back and forth. So basically these are these are things that you can ask questions for, and we give you the answers, all right, to those. So anything that we trade basically, and you get a question about, we help you with those trades. Okay, so it's not just getting a signal, but we really trade and share with you how to do this and the best way to do it. Okay, and we're talking to each other all the time. However, when we get the trade alerts, right, these are very specific, and there's no communication here other than asking a question, right? but these are the specific trades that we put on, and then we take off basically, and that's how we manage these signals. Okay. All right. So we have a lot of trader success stories, and you can see that these wins and most of the time, right? And these really work for these guys, you know. So I also have a guarantee. So if you subscribe to our to 1 month basically and lose money by following my trades, I'll refund your subscription by $1.25. And I've used this for 5 years, right? And I've had a trade alert service for 5 years, and I've never had to give money back to the people that subscribed. Okay, because you know, these trades work, and it's not just me that I trade. We have 3 other traders basically in the group that are you know, that trade for a living, and this is what we do. All right, so you have that expertise and the knowledge to get help, and these guys, you know, they have to do well because that's what they do, because that's what we do. All right, so we have different subscription plans. We have a free one that's in Telegram, and then we have the 4 other ones basically for these plans. And if you join the wait list, okay, and I'm not asking you to join the alert service, but if you join the wait list, basically you'll get $20 off for life by joining. And we open the service every 3 months, and we close it every 3 months. And then what happens is, because a lot of people, you know, we used to have people just kind of coming in little by little. We have to answer a lot of questions, but now basically we open the service for new subscribers, and then we share what we do, and then after about 2.5 weeks, everyone is in sync in what they're doing, and we close the service, and then we focus on the traders. Okay, and this is what we do. All right, so let me share with you the offer. And again, what I'm going to share with you is basically a way to join the alert service and get that 20% off. And then once we open, and you'll get an email from it, you can decide whether you want to come in or not. Okay, so let's see if I get this right here. So offer. It is. Okay, so you should be able to see it now. Okay, and yes. Okay, so if not, just let me know. All right, so I think we're good here. All right, so let me go a little bit further here now. Let's see what we got. Okay. All right, so if you want to learn a step-by-step process to gain an income in the market that goes up and down, and you want to finally take those series of losses and drains down, you want to earn consistent income that sets you apart from other traders, this is it. All right, so it really works, guys. Okay, so what you get, $20 off when you subscribe to our wait list. All right, and you don't have to pay anything. Okay, I just want to make sure that you know that. You have a professional traders chat group and subscribers chat group. Okay, that these guys are in there, and they're trading for a living. We have a training and education portal, automated signals within seconds of the trade, or a format of seconds of trade. Okay, and then trade entry and fill price. Price target after fill, and then we help you with adjustments to these trades, and you have access to the free Telegram channel, and a few live trades every week. All right, and then my guarantee that you will make money. Okay, so you can't lose. I mean, you really can't lose. So hopefully you have you have had value, from what I've shared with you today. And if you have any questions, let me see what I do here. I will answer any questions here. Okay, your ES options commission should be doubled since you have 2 contracts. No, not really. That is with the 2 contracts. Yeah. I mean, obviously, if you double the contracts, you have double the amount. That's correct. Okay. It looks like you have to monitor these trades all day. Yeah. I mean, if you're trading, if you're trading overnight, yeah, you are going to be trading these positions, right? But it's up to you how many trades you put on. What I like to do basically is I like to put on a position at at around 2 o'clock in the afternoon, and the reason for that is because the volatility, going into the close, it is helpful. Okay, so I like to put on that trade at 2 o'clock and then let it go overnight, and then around 12 o'clock, if things work out, usually you can close out that trade around 12 o'clock on the next day. So that's how I like to trade those. It's an overnight position, but yes, you have to be monitoring overnight so that you don't get into trouble. Okay, but again, if you're trading SPX overnight, and the market moves, then you can't do anything. But with ES futures, you actually can. What happens when you get assigned? Yeah, if you get assigned, you'll have a contract for that position, basically a futures contract, and so you'll get assigned for that position, depending on how many option contracts that you have. The strikes I use, as I mentioned before, I use 6 to 8 delta to put on that position, and that's how I put on those strikes. Does this type of trading require constant monitoring during the day? If you're trading a lot, then yes, obviously you'll have to. But if you put on one trade, which I like to do, like one trade at 2 o'clock, then yes, I monitor that position. But you can put on alerts basically to if the position gets threatened, you'll be able to get out of that trade if you have alerts on. This is being recorded and shared, absolutely. And what's the reason that you receive more credit on ES spreads instead of SPX spreads? Well, because basically as I mentioned before, when you do a 15 wide, you're getting a you're getting half of that credit. However, the amount, the leverage or the amount that you have allows you to trade bigger. Okay, and if you listen to the what I shared with you today, you'll go back and understand it and look at the numbers. Okay, and how that does that. Commissions on ES, yes, commissions on ES are higher, but again, if you look at what I mentioned, right, you can actually reduce the amount that you're taking in, and it compensates for the additional commission. Yes, the requirements for additional levels of credit, or additional layers of option, option. There's different brokers have different ways to do it, but you have 1, 2, 3. There's 3 or 4 different option levels for you to trade these, and I believe this one is a 3 level, close to a higher level of trading. When you're holding a position overnight, can you also that order to close at the profit goal? Yes, you can do that. Depending on what broker you're using, you can definitely manage those trades with those positions. You can actually do stops and profit targets. I like to use Trade-A-Bait. It's a great brokerage firm for futures trades. Okay. However, that's how I like to trade futures, but I trade options on futures with Tasty Trade and Schwab. Okay, let's see here. 10-point spread, you receive more. No, it's basically option lever. The position is actually when you have a 10-point spread instead of a 15 wide, or if you're using 10 wide for SPX and 10 wide for ES, you'll get less of an amount basically for your credit. Okay, for that. And again, go back and listen to what I put out as far as the difference between options. I'm sorry, between SPX and options on futures. Okay, and if you listen to that again, you'll get an understanding of it. I'm doing credit spreads already on SPX, so that's the same level of authorization. Yes, that's correct, Michael. Quentin, let me see, my TradeView software delays futures trades. Do I need to pay for real-time strategy? You need to, yeah. If you're using TradingView, I'm pretty sure they charge you for that. Okay. Appreciated the real trades. Are you trading now? Can you share a recent example? Not at the moment, because I'm trading a lot of different positions, but I go back to what's comparable, and actually when there's higher level of volatility, options on futures are great to do. Okay, and I'll probably be jumping back into those again. Is the wait list applicable even for those your alerts? Yes. Yes, they're always applicable. Absolutely. All right, I think we got it. If you do have other questions and you haven't thought about something, just send me an email, al@simpleoptionstrategies.com. Hopefully this was of value to you. You can email me anytime and let me know. And if you have any questions, I'll be there. All right, guys. Thanks. Hope this was of value to you, and hope to see you in the Trade Alert service one day. All right, thanks, guys. Talk to you soon. Bye-bye.